There are basically three patterns there are basically three entry patterns that you may want to trade. And this is a direct live video, so I'm going to be typing and doing everything directly here our in real time. Uh, so entry patterns for smart money traders. So entry patterns for smart money traders. So what are the entry patterns that you should be looking at as a smart money trader? So there are three I made mention of which I'm going to be teaching two, and the varieties of one. There's a way I'm going to categorize it for you to see now. So the first one I'll be talking about is change of character entry. Change of character entry, and change of character entry is of two types. The first type is that which has to do with, oh no, sorry. Ah. So the first change of character entry is that which involves the use of inducements. And if you have been following my videos, you should already understand what inducement means. You should already understand what inducement means, right? And you know that I really like to check. So with inducements, IDM, and there are also times I trade it without inducement, right? I don't wait for inducement before I take that trade, and that's a bit more complex, but I will try to explain it without an IDM. So the first entry pattern is the change of character entry. The second entry pattern that you should want to look at as a smart money trader is the flip entry. The flip entry. So the flip entry. Now you can also do the flip entry with inducement or without inducement. So let's go at it. So you can do it the A part of it. Flip entry A goes with inducement with IDM, and the B part of it. The B part of it goes without an IDM. Without an IDM. Then the third entry pattern you may want to look at as a smart money trader. This particular entry pattern works for those that really scalp. So if you're a scalper, you may like this particular entry pattern as a scalper. So that's the third one, and that one is what? Single order block entry. Let's just go for acronym SCOB. So single candle order block entry, right? Single candle order block entry. Now, this particular one is actually used for a market that is already trending. So I'm not going to be talking about it because it's not the kind of entry that you mainly want to wait for. It's mostly for ping pong traders, and personally, I don't do ping pong, right? I want to trade like a person that can hold a trade and trust a particular direction. I can actually ping pong, but no, I don't ping pong, and I mostly follow up my trade. That's my continuation trades on my higher time frame. I don't like doing continuation on lower time frame. So most of the times you get your single candle order block entry on lower time frame. Like if I am to get into a continuation for this particular gold that I've been selling for a while now, then I'll be going for single candle mitigation entry. I think around this place, this is single candle mitigation entry here. This particular order block here, I would have taken another sale here, right? I would have taken another sale there if I was doing SCOB, but I didn't because I don't want to trade that model. It's not a bad model anyway. It's actually not a bad model. It's just that it helps you take multiple trades in a single setup. I like to stick with just a single position as we go. So that's being that we We're going to continue with this class. So, what does it mean when I say change of character? Now, okay, now you should want to know that as a trader, there are two major times you are looking at entering the markets. There are two times, like two major periods of price movements that you want to enter into the markets. Like there are two major price periods, like movements. There are two major movements you want to look at, or two major reasons why you want to enter a particular market. Number one, you'll be looking at uh, reversal, right? When the market is showing a reversal, you want to enter into the market, because it is reversing in the opposite direction. And we as traders, we always look out for early entry models. So sorry, early entry periods. So when the market movement begins to change direction, you are looking at how you can take advantage of that change. That's a reversal that is already happening in the market. Once the reversal starts, you want to look for the earliest opportunity to enter into it and counterlize on that reversal. Otherwise, if you are not entering for a reversal, then the second place you should be looking at entering the market should be a continuation. A continuation, right? So if you are not taking a trade during a reversal movement, when the price is trying to reverse, then you should be looking for a trade during continuation. That is to say, when price has actually, rested. We know when price moves, let's look at this. When price moves, it does that in uh, series of pushes and pullbacks, right? So it pushes here, it pulls back, it continues downward, gives a pullback, continues downward, gives a pullback, right? So now, for you to be able to trade entry patterns profitably, you always want to look at, you want to understand what particular time you are coming into the market. Is it during a continuation, like for this particular place? It's a continuation kind of thing. No, it's continuing to the downside, right? A continuation to the downside, a continuation to the downside. So you are looking for easy setup that is in line with the trend, or you are looking for what? A reversal to the upside, like you want to do counter trend, right? You want to do counter trend. Is this a reversal movement? The market can give you a quick reversal, right? Just for the pullback, for the sake of pullback, market can give you a very, very sharp and easy, quick reversal that you can take advantage of if you like to. Well, I really don't like to take too much advantage of reversal, except that reversal is going to lead to a change of character on the major side of things. Like what I'm doing today, I'm expecting this gold reversal to lead to a major change of character to the downside from everything that we have been seeing gold during the last few weeks. So that's why I'm on this sale. I'm expecting this sale to come down and break this recent low here. That will give us a proper change of character to the downside, telling us that okay, gold is actually ready to come and grab up all the liquidities that are here, down here. So we can actually see gold do that. And I'm really, my hopes are really high that this is going to be happening this week, right? That gold is going to be, if at all, if it can't grab everything, at least taking out this one for a higher time frame inducement, we may actually see that. If you don't understand everything I'm just saying now, well, it's not a problem. You can always reference my other videos that I've made in time past. It will really help you understand. It will really help you find out what I'm talking about when I mean all those statements, or when I make all those statements. So to continue with this, you always want to determine, am I trading a reversal or am I trading a continuation? When you have determined that, then you can go ahead and pick your entry patterns. Now, one thing about entry patterns is that you don't just see them every day. There are sometimes a trade can get to your zone, right? And you don't see your kind of entry patterns. Should you jump into that trade? No. Even if the trade has to go, you just have to allow it to go. Why? Because a particular part of your strategy has not been fulfilled, right? A particular part of your strategy that you respect. As a trader, you should learn to respect every single aspect of your strategy. And if a particular aspect of your strategy has not played out, then you should learn to just, reserve, like stay reserved until when it is complete. Then, you have nothing to waste on. When everything about your strategy is complete and everything is aligning, including your entry pattern, your direction bias, and everything. When it is completed, you know that you just have to take that trade. No emotions involved, just yourself and the market. So that's that for that. Then so what is change of character entry? For us to understand change of character entry, we first need to understand what change of character it's in itself. What is change of character in its own self? That's what's the meaning of change of character. So I will take out little time to explain that. Now, from my other videos, you must have seen me teach structure. So proper understanding of change of character will come from a good definition of structure. So look at this. Let's imagine price is in a downtrend, and we are seeing lows and highs are being formed, right? Lows and highs are being formed. Lows and highs. Some people say this is a lower low, and this is a lower high, and this is a lower low again, and this is a lower high. Well, for me, those are not lower lows and lower highs. They are just common lows and common highs. Just everyday stuff the market does, right? Trend pull back on its way somewhere, on its way to go and grab a particular liquidity. But for me to mark a place as a lower high or a lower low, I must see certain confirmations that tells me, and that helps me to make my structure mapping less cumbersome and more effective. So let's go about that. So for me to say that I have a lower low here, right? I must see something that I call inducement. Inducement means that the most recent, in a downtrend, the most recent high that structure or price created is being violated. So looking at this, I must see price violates this, right? So I see price violating this high here. Now that becomes a good entry trigger for me. Now when some other person see price violating a high, it becomes a reason why they want to buy this trade, right? They want to begin to buy this market. Feel like, oh, price has given us a reason to buy, so let's go ahead and buy it all up. It's an opportunity to do that. Well, it may not be even as much as it presents himself to be a buying opportunity. It may actually not be a buying opportunity in the real sense, because you know you are actually trading against certain persons that are called market makers, right? Those persons are called market makers, and it means that there is a particular way they do their things, but there's a particular pattern they follow. They do the same thing every day. They repeat the same movements every day, every single day in the market, but in different price patterns and all that. And their trick is the same. They try to make you buy, and when you begin to buy, they sell you out, right? They run for your stop loss, and they call it their liquidity, retail traders money. So in a bit to avoid that, when you see something like this is uh the first high, or the last high markets created, sorry, in a downtrend. When market violates it, you in many cases shouldn't call that a break of structure. That could just be an inducement, right? That market wants to what? Go down lower. It has gone there to grab every single liquidity that's there. So looking at this, once you see this happens in the market, you can see some continuation to the downside. Now when this happens, I can tag this place as my what? My break of structure here, right? This is my break of structure, and this high up there, this is my strong high here. It's a major high, right? I always want to call it a major high. And this place here that caused an inducement is my major low, right? That's my major low. And when price violates my major low on the downtrend, I call that a break of structure. And it's a normal thing for price to violate the major lows on the downtrend. That's what price always do. It violates the major lows and respects the major highs, because it's in the what? In the downtrend. So remember, we are still talking about change of character entry. Change of character entry. I'll summarize it in a brief moment, and we'll be looking at one or two examples on the chart, and maybe I can just briefly give a recap of uh, one or two trades that I've taken using that, and even the flip entry, if time will permit us to do that. Okay, so then I call this a break of structure. Why? Because a major low that price created a short while ago has actually been violated, and we, just as I said earlier, we expect price to violate all the major lows in a downtrend and to respect all the major highs in an uptrend. So in that case, what are we going to have there? Uh, we could have price after violating this low. Price could do anything further it wants to do, but we know that the trading range is now what? Between this high and anywhere else that price wants to go. Where is it that price wants to go? Price will give us something. In many cases, it continues to range downward until it violates again, right? When it does this, it gives us a major low that we can actually work with. help me put off some things. The solar is disturbing. Okay, so back into this. So we can see an inducement here again, right? At this point of inducement, we have a major low, expecting that price can come and break this major low. At this point, at this break of structure, this has become a major high. Now, where do we have a change of character? We have a change of character when price comes, does everything it wants to do. Now, price has the liberty to go anywhere it wants to go between the major low and what? The major high. But we don't expect price to break out the major high. So in many cases, we want to have some level of, what's it called? We want to have some level of array, some PD array, some price delivery array that we are expecting price to respect here. Mostly, maybe a fair value gap, most likely an order block, most likely uh, uh, some IFC, that's institution funding candles, or whatever it is, some liquidity, some maybe some session liquidity we're expecting price to sweep and reverse. Whatever it is, we have this place as our price of interest, our POI, and many times we see price approach it and they just continue downward. But if it happens that price approaches it and breaks through, right? If price approaches it and happens to break through it, then we have a change of character. It further means, or it simply means that we will now begin to look for a POI where we can take our trade. So change of character entry means that a major place, a major structure there has been broken. So change of character entry now have you do this. You are waiting for some structure point, maybe here at some pullback here, and you're expecting price to just come down and take it up and return back from there. So this particular trading pattern is called change of character entry with out an inducement. But if you are going for an inducement, then you know it's that, okay, as a smart money trader, the most recent low that price has created in this case is an inducement low. That is to say, there is a high tendency that price is going to sweep it out, right? Price has the highest tendency of sweeping an inducement level. So what are we to expect in this case? So we expect price to, instead of returning from there, we expect it to come down here, right? So it takes this place as inducement. So we can call this one smart money trap, SMT. In many cases, we call it SMT. That's a smart money trap. If you check my my chart, I will most likely paint that place red and introduce an SMT there. That's a smart money trap. The market makers know, or the institution knows that many people are moving into what? Smart money concept. And traders are becoming smarter every day. So the only thing that the institutions can do to enable them collect money from traders is this: to act smarter, right? Institutions have to act smarter. And that is to say, they are going to give traders, the smart money traders, some particular levels that those traders will trust. Those traders will feel like, oh, this particular level is going to hold. This particular level is the level I'm waiting for, and this and this and that, and anything you can think of. And when price gets to that place, price will quickly violate the region and continue going in the other direction. Or even if the real intention of price is to buy from here, right? Because character has actually changed. We have a change of character here, CHOCH, telling us that, okay, price is no longer interested in the sell side and price is now interested in the buy side. So there's a violation of uh, structure. There's a structural violation there. So we can call it a change of character already. We call that a change of character already. It's a structural violation there. So the character has changed from being bearish to being bullish. So let's call that change of character. Normally we use uppercase to write, but that's lowercase. Doesn't matter. Let's just keep going. So what you have here is a change of character. This explains to us that, oh, price has gone from being what? Being bearish, obeying bearish structure. Now price is interested in what? The bullish side of things, grabbing out all the liquidity on the upside. So your first entry model as a trader is the change of character entry. And this entry is mainly used for what? For reversal movements, right? Reversal movement. You can also use it for continuation anyway, but it's majorly used for reversal movements, mostly the one that has an inducement. The change of character entry with inducement, you mostly use them for reversal movement. So let me give you a brief example again. Let me give you another brief explanation. So it simply means that when price, let's say on your higher time frame, you see price coming like this, coming down, coming, coming down, right? And price gets to a particular point of interest where you're expecting it to, to reverse from. Remember, you don't just come to market and begin to look for patterns. So the first thing you want to do when you come to market, identify direction. When you have identified your direction, the next thing you want to do is to identify zones where the market is likely to pause, zones where the market is likely to sweep, and zones where the market is likely to what? Have a reversal from, if it is going to have a reversal. So let's say this zone happens to be one of the zones you're expecting price to have a reversal from. So the next thing you want to do is to scale down to your lower time frame. So if you're on 4 hours, when you saw price tapped into this zone, you saw price tapped into this zone, and you're on 4 hours, the next thing that will be expected of you is this: you run down to the corresponding time frame. I have actually taught time frame correspondence here online before, and I get the time frame in twos. As traders, you don't actually need to scale through 10 time frames before you make decision. One thing that you should know as trader is that the higher the number of time frames you trade with per trade is, the more confused you become. Many times understanding what goes on in one time frame is already confusing. And imagine having to deal with like 5 time frames. So certain persons will open up their charts, they will draw analysis on the daily time frame, and they will scale down to the 4 hours, and they will do some adjustments, and they will scale down to the maybe 1 hour, and they do some adjustments. They go down to 30 minutes, and then to 15 minutes, and then to 5 minutes, and then to 1 minute. How do you deal with all those time frames? You only get confused, right? You only get confused. So the best way to deal with time frames is to pair them up. So for a trader like myself, when I deal with the 4 hours time frame as my higher time frame, I always want to pair it up with the lower time frame, right? And the lower time frame for me that goes with the 4 hours is the 15 minutes time frame. And I believe many other traders around the world also use this particular pattern. So let's say, for instance, you find this on the 4 hours time frame. The best you want to do, or the next thing you want to do, is to just scale down to your 15 minutes time frame and look for an entry pattern. See what price is doing there. Understand what price is doing in the 15 minutes time frame. So on the 15 minutes time frame, you're going to get micro movements, right? Let's say in this POI, you're going to see micro movements such as this ones. Price come down, still trying to fill some orders here and grab some persons in this market, and you could you could in many cases you could see something like this. Price coming up. The moment you have a violation here, right? The moment you have your first violation inside your POI, once price gets to your POI, right? And you have scales down to your lower time frame. The moment you have the first violation, that gives you what? Your change of character, right? Why? Because you are in a lower time frame and price is in your point of interest. So you are in a zone where price is most likely to reverse from. So you are not waiting for price to come and violate this one that is up here before you say, oh, we have a proper change of character. No, in your lower time frame, the first violation is the change of character. While in your higher time frame, let's say something like this, if there is an inducement before this high, but if there's no inducement before this high, this is your inducement high. Price coming to violate it, there's just inducement for it to, in most cases, trade lower or grab some liquidities higher, gets to a point of interest, and run back down again. So looking at this on your time frame here, so you want to see price do something like this because it's a reversal move, right? You want to be very careful. You don't want to get into some liquidity sweep, some liquidity grab. You don't want price to, so you don't want price to sell you out when you begin to buy because you just got to your time frame. So one thing you want to do is this: you want to wait for, because it's a reversal, not a continuation. Remember, the market on higher time frame is in a downtrend. So you cannot just start buying in a downtrend. But should it be that you have to buy because you have spotted a nice POI that the market is supposed to buy from, maybe for a retracement on higher time frame, right? From this lower time frame here, you are looking at a higher time frame retracement. For me, I'll be looking at maybe a higher time frame retracement to a point where it induces this particular high there. I want to see an inducement. That's to say, I want to see price on higher time frame come and take out this particular high, and it's just going to be something like this. When price traded down, I'll be looking for some change of character entry here, and price comes to induce it to further continue the movement. So this is more like a higher time frame expression here, and this one here is just what it is. So when you see when you see such a movement, when you see such movements, you actually want to be patient as a trader. You don't want to be in a hurry. So you could see price forming some number of highs. It doesn't matter. Doesn't matter. Doesn't mean that price has actually gone away. Well, sometimes price actually don't come back. But in most cases, because it is a reversal that price is trying to cook up. The price is trying to cook up a reversal, not a continuation. It is doing this in a direction that opposes the main trend. So you will not see it do it with a heavy momentum, right? I usually tell my students every market movement, every when you say okay, market moves in an uptrend or downtrend, every trend has two faces. That's what the impulse phase and the corrective phase. The impulse phase is usually influenced by institutions, right? The impulse phase is usually influenced by institution, and the correction phase is usually influenced by what? The retail traders. So they just test powers there. The retail traders will do the correction phase. That's to say the counter trend. So if this is influenced by the institution, retail traders will influence this with small money. So you see it, the volumes are usually not very high, it's just, and it's usually very choppy, and a whole lot of liquidity is represented around there. At the end of the day, this becomes a liquidity pool that smart money is going to use to sell down this market as a continuation, right? So you see that reversal trends and reversal phases are usually very slow, right? They're usually very slow. So you have multiple opportunity to catch, a trading entry as a smart money trader there, as a smart money trader, but you don't want to do it in a way such that you get liquidated by smart money. Because one thing that smart money is going to do here is this: they are going to come back for some inducement here. They can induce a single high, a single low, or they induce the two lows here, and you see a kind of movement maybe into this place here, and a continuation to the upside, right? So in that case, this becomes your change of character entry, in that at your first violation, sorry, at your first violation, you had a change of character here on lower time frame, right? At this first violation, you had a change there. So you have your change of character there at the first violation. Remember, this is a reversal entry. And for reversal setup, you always want to wait for inducements as your confirmation, right? Inducements are the confirmation. So remember also, in this place, you don't just see inducement and you jump in. Your PDRA must match. That is to say, you are looking for your order block, and the order block is usually the extreme order block here. So you are looking at the extreme order block there for your buys, like you are buying into that zone there. So you are looking at the extreme order block for your buys, and once it arrives at the extreme order block, you are ready to sell into the higher time frame inducement there. Remember, this is actually not the major high on this time frame. This is not the major high on this time frame. It's just some high that market is gonna sweep at one time or the other. So you want to buy into this high here, and at that point you prepare to exit. Why? Because it's an inducement. Once market takes out an inducement, you are most likely to see a reversal, right? Market is most likely to reverse, change direction to continue moving down, except there are other liquidities up there that market or price is trying to hunt. But if there are no liquidities above your inducement high, if there are no huntable liquidities, probably you check out and see that, okay, above the inducement, every other flow has been mitigated. Above the inducement, every fair value gap has been filled. Above the inducement, every other block has been, filled or mitigated. Or above the inducement, there are no liquidities. There are no liquidity zones that market should take. And you know what liquidity stands for us? When we want to identify liquidity, we look out for, some price patterns that retail traders trade with. We want to look for double tops, we want to look for, equal highs, right? We'll call them maybe double top, triple top, whatever it is in a selling trend, just as this one. So we want to look for double tops, we want to look for triple tops, we want to look for some head and shoulder patterns, many other things that you feel like a retail trader should trade. And we target those zones as our liquidity zones, because those are the zones that market is most likely to approach for liquidity grabbing, right? So in that case, what do you do here? So you take your entry around this zone, right? Because this is your change of character, and this place, which is the most recent high, happens to be your what? Your your inducement for the sell, right? So one thing is this: price can take this inducement and start buying immediately. Otherwise, price can approach the extreme order block and start buying. Whichever way you see it, that is your entry trigger. Is that going to happen? Would that be correct? Let me show you. I think this is, so you can see me selling gold today, and without controversy, great is the mystery of this entry pattern. Okay, look at this. This happens to be my lower time frame. This actually 5 minutes. I actually did this trade on 15, not 5. Yeah. So this is the entry time frame for this particular setup here. I just need to remove this. So this is the entry time frame for this particular setup here. Where did I spot this trade? You spotted it on. I spotted it on 4 hours. On 4 hours, I began to see how some price movement began to ensue, right? Market began to look for the downside after getting into a very nice zone. We tapped around the nice zone, and I already saw that okay, price has been going up for a while, right? It has stretched itself to a very, very, very elastic point. It has gotten to its elastic limit. If it breaks above this place, then it's going to do another very, very long stretch, of which it has not mitigated for the ones it did in recent time. That's sentimental analysis. Put that as one corner. Now, is there any zone that price is most likely to respect going up? Right? Is there any zone that price is most likely to get to and reverse from? Are we going to see reversal for any zones? And these zones here, this particular ones happens to be the places where reversal moves may occur. So looking at that, on that zone there, as price approached that zone, and we saw this high movement, like this high momentum candle rejecting downward, we know that okay, price is actually reacting to that zone, and it is most likely to sell from there. So what can I do as a smart money trader to make profit from this zone? Okay, the next thing is for us to look out. We are going to scale down to a lower time frame. Why? I told you, once price gets into your higher time frame level, you scale down to your lower time frame. So for me, since 4 hours is my higher time frame, what is the next time frame I'm going to use to follow up this trade as my lower time frame, right? We trade just two time frames, the higher and the lower. So for me, for 4 hours, we pair it up with 15 minutes. So we want to go and check out what price is doing on 15 minutes. So on 15 minutes, this was that long 4 hours move you saw there, right? This is the market coming down on 4 hours, right? So uh, I told you initially, the first violation that price gives on lower time frame is your change of character. If I'm looking for change of character on 4 hours, let me show you where change of character on 4 hours will be. The 4 hours change of character is definitely not going to be here. These are 4 hours inducement. I want to trade into our 4 hours inducement for a continuation to the upside. But the 4 hours change of character is going to be somewhere around, let's sort it out. Is it okay? No inducements, no inducements, no inducements. A 4 hours change of character will be below here. I know many people are going to fight me for this, but for structure, proper structure, a 4 hours change of character cannot be earlier than here. SMC structure. You want to see a 4 hours change of character, and this 4 hours change of character will only tell you that okay, price is ready to do some critical downward movement on the daily time frame. You get that? Just as 15 minutes change of character told us that price is ready to do some critical downward movement on the 4 hours. If we are to scale to the 4 hours and we see price breaking below this zone on 4 hours, then we know that yes, price is ready to do some critical downward movement on the daily time frame. So that's how you pair time frame. Well, for me, the 4 hours time frame is not paired up with the daily, but it's paired up with what the weekly time frame. So you pair the 4 hours time frame with the weekly time frame, and you pair the daily time frame with the 1 hour time frame, right? So that's for that particular movement you have over there, right? Okay, so what's the next thing you want to see, or what's the next thing you want to know as a smart money trader? So this is our higher time frame, right? These are higher time frame here. These are 4 hours time frame. So the next thing we are doing is this: we are scaling down to our 15 minutes time frame. So let's go there. On our 15 minutes time frame, which happens to be our lower time frame for this particular setup, I will be wrapping up this this change of character entry very soon. And I think if you want the other aspect of it, you have to come to my DM and ask questions, and I'll make specific videos on those particular ones. So looking at this, on 15 minutes, this is our first violation here. We could call it this, but I didn't want to call it this. I didn't want to call it this for some reasons. I prefer to use this as my first violations here. So this being my first violation, what is the next thing I'm looking for? After my first violation, price came back up, created a high, and broke down again. You can say I didn't put any break of structure there because that's actually not a break of structure. It is not a break of structure. It's just price violating a low is created, right? Because it's interested in the downside. So price violated this low that it's created. Some people call it break of structure. It's not. Then what do we see next? Price came back to sweep the high. Price came back to what? To sweep this high there. Sweeping that high means one thing. It means inducement. Price sweeping a particular high means that what? Price is actually inducing. Price is doing something called inducement. And inducement is just a false, in this case, a false buy move, right? And inducement in this case is actually a false buy move, a buy move that tends to deceive traders into taking buy trades, whereas the market is actually going to be selling afterwards. So inducements are false buy moves. So we see markets creating an inducement here, and initially I told us something. After an inducement is created, this becomes a strong low here, right? So if I'm to mark this up, if I'm to mark this up on lower time frame, I usually don't like doing my major and minor zones on lower time frame. I don't like placing markers on lower time frame. But if I'm to mark this up, this has become a major low, and this also is a major high. To mark this up, this will be a major high. Why? Because it has ensued a what? A change of character. It has actually caused a change of character. So we call it a major high. So let's leave it as a major high, and this has actually caused an inducement. So we'll call it a major low, and let's move up. Uh, Now, I told you initially, price has the liberty to do anything it wants between what? A major low and what? A major high, right? So it can also come back, induce, play anyhow, just do anything. If there is any order flow that has not been mitigated, we look to see price mitigate those order flow. Mostly when the reversal is starting, the starting of a reversal move, right, is usually not fast. Why? Because price has to create enough liquidity. The institutions have to create enough liquidity with which they will drive the price in the opposite direction. So you see them doing that a lot. They create liquidity here, create liquidity there, sweep it, and all that, and all that, and all that. So planning for this reversal, you see all the liquidities that were created here, and see how price did the mighty sweep there, broke structure to the downside. Now, this has already given us an aspect that, okay, probably price is willing to really go down. And look at this, price broke structure again, or it violated structure again to the other side, to the downside again, giving us a two-step movement. So what do we expect? Do we expect price to just continue running down? Of course not. It's a reversal. It's going to take time. So looking at this, price comes and gives us an inducement here, but there is a zone that price really wants to sell from, right? Price really wants to sell from this zone here, and this zone is called the the liquidity zone, right? Candlestick, candle wick rejection. Like if you have watched my other videos, I've told you that there are points I tag as my POI. I can use an order block as a POI. I can use a fair value gap as a POI. I can use an unmitigated wick rejection as a POI. And I can also use some highs and lows, like session highs and lows, as my point of interest. As you can see me, I don't see an order block, I don't see a fair value gap, I don't see anything, but I just look at this and say, okay, this was London session yesterday. This was London high. So if market is in a downtrend, so New York should come and take London high before it goes down. I can just say, okay, this is Asian low, right? Asian low should get swept, and maybe price should approach London low before it continues going up. So you can always see all those kind of movements every day on the chart, right? So there are four things I consider as my points of interest. Number one, I want to take an order block. That's the one I respect the most. That's one I use the most. Then aside that, I want to use some weak rejections. Aside that, I want to use liquidity sweeps. That's sessions. Sorry, liquidity zones and session sweeps. Anyways, I've mentioned it, so let's just go ahead. Then what do we see next? So price came to the zone where we are expecting it to come to. But anyway, I already took my trade from here, right? Because there's an order block here. though this other block was not a valid one, but I actually violated one of my rules. It would have helped me. If I had obeyed my rule, I would have taken this trade from this sniper here, but I actually took it from here because I also felt like, oh, price may actually not come back. This is good, right? Why? All the liquidity up here has been taken. It may have nothing else to come and do there again. Because there are sometimes you see the weak rejection and price actually does not come back for it. So that's that for that. So we, in many cases, want to look out for inducement because it is a reversal move. Now, if this is not a reversal kind of trade, right? If this is not a reversal kind of trade, the moment I see price comes to this place, I am going to be taking my trade here at the retest, right? I just take change of character without an inducement. That is to say, if this is a continuation move, let's say I come to this place and I see price give change of character here to continue to the upside. So at the instance of the first change of character, I don't want to look for an inducement. Let me show you what I mean by that. Look at this. Price has actually been going down, 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 down. And at the first change of character it gave here, the first violation of structure it gave, what do you see? It didn't have time to come back and begin to look for any mitigation or anything to any other block or whatever it is to mitigate. No, it didn't. It just went away like that. Let me show you another one again. So price is in an uptrend and price came down, boom, here. And this is the first violation we saw. This is the first violation we saw around this zone. You can call it this zone if you want. This will be the most proper way to put it, but no, as a good SMC trader, you want to be very, very critical about your zones. So this is the first violation we saw here. And did price come back for that for the other block down there? Did it come to look for any inducement zone? Well, it gave an inducement, but it didn't give a deep inducement. Just this is the zone where it induced. It induced up here. The last high that was, or the last low that was created, took out the low and just came down here, boom, and continue. So you don't really look out for, if it's a continuation trade, you don't really look out for deep uh don't really look out for deep mitigations and all that. That's, you may not be looking out for serious inducement because the market makers already have the direction that they want to go, and they are already investing their money. There is enough liquidity to push price in that direction. It's not like a reversal when they have to look for the early bees in the early beds, sorry, look for the early beds and sweep them out of markets before they continue in a particular direction. So that's that. uh okay. So aside this, which other entry pattern or which other reasons will I see? What else will I look at? I know somebody will be asking. So what else would be the reason why I don't wait for an inducement? Many smart money traders ask this question. Why should I not wait for an inducement as a smart money trader? When should I wait for an inducement? When should I not wait? So these are some trades that you should look at. So look at this. Trading with inducements. These ones were done without inducements. Just think I've explained all these trades in some of my videos, like some videos I made some time ago. So which particular kind of trade should I take without an inducement? Well, you can actually take trades without inducement when it is a continuation trade. You can actually also take trade without an inducement when you are trading at a major time frame inducement. Okay, I made mention of something of which I'm going to reiterate. I say I said at inducement point, what do we get? This is an inducement point, right? Where price comes and sweeps out the most recent high in the market, right? So when price comes and sweeps out the most recent high, that is actually an inducement point. So looking at this, you just had an inducement in a major time frame, and price has most likely given you a weak rejection. What else are you looking for in the lower time frame? When it gives you a weak rejection after an inducement, it has taken all the liquidity it wants to take from that zone. It simply means that it has actually taken all the liquidity that there is to take in that zone, and it is actually running in the opposite direction from that instance. Once it grabs all the liquidity it wants to grab, it will run in the opposite direction. It simply means that there is likely not going to be any inducement again. It's just going to run and run and run and run. So in this kind of a case, when price gets to this kind of a zone, the price gets to this kind of a zone, you don't begin to look for inducements. It has already induced on higher time frame. So when you go to your lower time frame, you see your first violation, you just take it. So remember, I initially mentioned this is our higher time frame inducement, capital letter IDM. And so when you are trading this on your lower time frame, what is it you are looking out for? Once price violates the zone and gives a weak rejection, right? Let's say and breaks. This is your lower time frame now. So violates it and rejects on higher time frame. You scale down to your lower time frame. You go and look for structure formation, right? At the first violation, you have your confirmation that, oh, price is actually going to be selling. And what do? You look for any single mitigation that comes up. Either price comes back to fill a fair value gap, either price mitigates an order block, either price continues an order flow on lower time frame, right? Whatever gives you a good a sizable risk, some small risk, right? Whatever sells your boots, anything you see there at that point in time, you can actually take your sell. And when you are doing that, you want to put your stop loss above the zone, and you take profits below zone here. So looking at this, you can actually see some good trades here. Let's say your order block on lower time frame is this. So you put your trade above the zone, and you take profits most likely below the zone, because you know that this is a place that price is actually coming to sweep, right? Price is actually coming to take out the higher time frame uh, lows here, the major lows here, right? The major lows on the higher time frame. Why? Because it's a downtrend. So in a downtrend, what's price going to do? Price is going to respect the highs and violate the lows. So you know that once character has changed here, right, at your first violation of structure, you know that, oh, yes, price is actually coming to do what? To violate all the lows that are down there. So what do you see? Sorry, this has to be like this. That's the sweep there. So you see some liquidity sweep here, and one, and you know that price can actually grab all these uh, minor structures here, forming internal structures, and gets to this place, and this becomes your what? Your break of structure. So that's how you actually get the best trading entries. That's how you actually get the best trading entries. So time will not permit us again. If not, I would have still shown us many examples. I would have still shown us many examples on so you can call this now your break of structure. So I would have still shown us many examples on the charts to help us understand how these things work. So you can see that when you follow these entry patterns, your risk reward ratio is going to be very high, right? You are going to be having a very tiny risk and a very sizable reward. In most cases, you'll be able to have your risk above structure and your reward below major structure, right? So somebody will want to ask, how will you be putting your risk, your stop loss is above a minor structure and your take profit is below a major structure? It doesn't work. It's an improper fraction, whatever it is that you want to call it, but that's what works, right? It actually works. And you can see a proof of it. This particular trade was taken in our live account, our FTMO account, and it's actually moving. Though we have been here since morning, and we still expect it to do some critical sales down to this zone. I think my take profits around this zone, but I'm thinking of extending it down. Anyway, I can still just lock up the profits, right? Lock up the profits and stay until it gets down below all this place, because I know that this movement that I've started is actually aiming to come down for all these liquidities here, right? All the liquidities there has to get swept. So that is that for the change of character entry. And this change of character entry, we have talked about two types of change of character entries: the one that goes with an inducement and the one that does not. Yeah, yeah, my right up, my right up, my right up. change of character entry that goes with an inducement, and the one that does not. Looking at this, so entry patterns for smart money traders, the change of character entry, which happens to be one of the most important and the most vital entry pattern that you can have as a smart money trader. So we have just talked about the change of character entry that goes with an inducement and the change of character entry that goes without an inducement. Then the next kind of entry you want to look at as a smart money trader is called the flip entry. The next kind of entry is called the flip entry. So what is the flip entry actually? What's the flip entry? So the flip entry is majorly traded using the idea of supply and demand, right? So you have a supply zone in the market that the market is respecting. The market has been creating higher highs, higher lows, as you will call it, if you want to call it. So, and at some point, the market violates a particular low or violates a particular high. So flip entry, it we have you do this, that you wait until price comes back to a particular level, and when it gets back to that level, the level that caused the violation, then you want to see a trading opportunity there. So flip entry can also come with an inducement or without an inducement, right? mm. I mostly I mostly don't trade flip entries, not because of they are not good entries, but in many cases they are similar to change of character entry, right? They are similar, just very tiny differences, very very tiny differences. So let me draw out an example. Okay. We still have some unwanted diagrams. Mhm. Still have some unwanted diagrams I want to get rid of there. I'm marking up. Okay, please forgive my silence. Just want to get a clean slate so that we can start up. Okay, so we can see our sale really, really pumping downward. When people have actually gotten scared and they ran out here, we understand a theory that is called the theory of mitigations, right? Order flows. So order flow was being mitigated here. That's why we had price run up here quickly, and you can see it down here. So with this, we are confident that this our zone here is the next place price is targeting, filling up all these zones here. That's going to fill up all that zones there. And funny enough, I shared this trade on Telegram with few persons this morning. I think one of my students, and on WhatsApp with few other persons. I shared this trade with a friend. Look for it. Okay. Or is there any need? Okay, let's just go ahead. I would have loved to show us. Okay, so um flip entry. Flip entry. So I've just explained what flip entry actually looks like. So you see price moving up. Am I down? Am I trying to? So you see price. I will do this with an uptrend. Flip entry. So you see price moving up on higher time frame, right? Moving up on higher time frame. Moving up on higher time frame, and then you want to see a continuation here, right, to the upside, or you are expecting a continuation to the upside. Why? Because price has actually approached your zone. Expecting a continuation. Why? Because price has actually approached your zone, right? So price has actually approached your zone. So what is the next thing you do as a trader? You want to scale down to your lower time frame. Imagine this is the 4 hours time frame. So you scale down to the 15 minutes. And if this is happening in a 1 hour time frame, you scale down to the 5 minutes, right? If this is happening on 15 minutes time frame, you want to scale down to the what? To the 1 minute. That's how to go about it. That's how to go about it. If you are seeing this on the daily time frame, you want to scale down to the 1 hour. If you are seeing this on a weekly time frame, you want to scale down to the 4 hours. And if it is the monthly time frame you look at, then you scale down to the weekly, right? Sorry, the daily. If you look at the monthly time frame, you scale down to the daily. If you look at the weekly, you scale down to 4 hours. If you look at the daily, you scale down to 1 hour. If you look at the 1 hour, you scale down to 5 minutes. If you look at the 15 minutes or the 30 minutes, you scale down to 30 minutes, you scale down to like 3 minutes or two. Then if it is 15 minutes, you scale down to 1 minute. If you are using 1 minute as your higher time frame, I don't know. Anyway, just go. That's for uh Jovianessi. Okay, if we are to continue this on our lower time frame, what is it that we are going to be looking for? We are just looking for a simple pattern here. A simple pattern here. We are looking for violations. So on lower time frame, you must have been seeing something like this. Oh, price creates a low, price seeks the liquidity down there, prices into the zone, prices your zone, further prices your zone. In many cases, you may now see things like this. Now, price, this demand zone, here can, in many cases, now become strong. So price doesn't break below it again. And price forms maybe a zone. In many cases, price can form a zone that it uses and it violates this supply. Now, what do we look at it? What do we say? This supply zone, which broke this structure, was a strong supply, right? Was a valid supply. But this demand zone, which created this upward movement, well, it's a demand zone we're expecting price to come and violate. Why? Because we have been looking at a downtrend. But in a case where that zone doesn't get violated, instead a new zone was formed. Instead, a new zone is being formed. Let's look at it. Let's say a new zone here is being formed. Then what do we see? This zone violates the initial zone that was a strong zone. We have a proper violation here, right? Some people want to call this movement here, they want to call it SMS. And this one here, they call it BMS. So they'll be looking for return to order block, SMS, BMS, RTO. That's also a very nice way to trade flip, right? That's a very nice way to trade your flip entry. When you see an SMS, a BMS, an RTO, that's a return to order block. That's one of the best ways to trade flip entry. And whenever I trade flip entry, that's what you see me do. It's, SMS, that's the shift in market structure, right? That's not a break of market structure. So market structure, which was to the downside, right, was to the downside, moving down, coming lower. This market structure has given a shift. Why? It didn't create a new low. It actually created a low, but this low was a bit higher than the initial one it's created. So call this particular movement a shift in market structure. So if I'm to trade flip M3, the first thing I'm looking for is a shift in market structure. Should it be that I don't get the shift? It's not a problem, right? But I look out for a shift. And once it does that, right, for reversal cases, okay, sorry, for continuation cases, I really don't want to look for an inducement. I don't want to look for an inducement because it's a reversal. But if it gives me an inducement, it's fine. But if it doesn't, well, it's actually a continuation. So, but if it is a reversal case, I definitely will be looking for an inducement. But if it is not a reversal case, no, I will just run along with what I get. So, looking out for this, on lower time frame, what do we want to see? We want to label now. Okay, so this was the strong zone we were expecting price to continue the sell for. But when market tapped into that zone, what did we get? We saw on our lower time frame some rejection. That was momentary rejection, right? We saw a momentary rejection. And what happened next? Price had to break above, right? Price had to break above. So in that case, since price has actually broken above, what do we have? We are waiting for price to come back to the zone, the particular zone that caused this break here, the particular zone that caused the violation, the particular zone that sponsored the violation, and that will be the zone we are actually entering from. So look at this. This is the zone here that sponsored that violation. So in most cases, you have price come back to that zone and run. Like it will continue the run from this zone. In most cases, you see something like this. Price runs back to this zone here, and you you see price continuing to the upside. And some people will be asking, why did price not induce? Why did this not that? Why did that not this? That's a continuation movement. You are most likely not going to see an inducement because the momentum in that case is very high. So once the momentum is very high, you may not see an inducement. Price will just, do its thing and go away. And in other cases, when you have an inducement happening on higher time frame, this is the kind of reaction you see on lower time frame, right? You have higher time frame inducement, maybe 4 hours inducement for the sell. Let's say this happens like this. If this is 4 hours and price does something like this, takes out the low, not a change of character, but gives a weak rejection, gives us a weak rejection, a strong weak rejection, right? Once price gives us a strong weak rejection back to the upside, price gives us a strong weak rejection coming back up, right? Most of what you are likely going to see on lower time frame is this. You may not have the opportunity or that luxury of having price come back down here because it's going to be flip entry. And in many cases, to confuse traders, right? What market makers are going to do is that they're going to give you a valid order block, even with fair value gap there. Let me show you this. On Bitcoin last week, this actually happened. And I was in the class, I was explaining to somebody that we may see, I think it was even on Wednesday live. I was explaining to, I was teaching last week, Wednesday. You see, I think it should have violated this place now. Okay, it's coming back up. So this was last week Wednesday's setup for Bitcoin. And looking at this, we had seen some level of violations here. Liquidity has been swept, and we could have called this, but we call this one our change of character, right? So price swept liquidity here, give us a proper change of character here. And what is it that we are actually expecting to see? We're expecting to see price come and induce at this lower point here, tap into our order block, and then run upward. But did we get it? Of course, we didn't. We didn't get that price actually did all the movement it's going to do to the upside before it finally came to tap us in. That was yesterday, right? I think this should be okay, Sunday, Monday, yeah. This was on Monday, and this was yesterday, second tap into the zone. And at this point in time, well, if you are trading this, I expect you to be leaving because the dollar is actually gaining some level of strength that will make such trades. Anybody trading this, your trade may go south, right? This trade may go south. It may go south because the BTC has actually consolidated for long. Albeit, we may see price coming to sweep above here as liquidity grab for the sell. Right before it sells, you may come and see, you may see this, you see price come and sweep this high. And that's what I was expecting. I was expecting price to come and once more take this high as what? Liquidity before we actually see the sale happening. But it may not get that high again since there are zones that's created here. So it can take out these two zones as the liquidity it needs, and then it's going to sell from there, right? So whatever it does, we are here, keep trading, and we'll keep watching what is going to be happening. So you may see price come and sweep out all these highs and not get to that take profit high again. And, anyway, that's for that. So we see such movements happening. Why did this thing move so fast? Because on higher time frame, it had already given us some level of liquidity sweep, and in that case, it may not want to come back to that zone properly anymore, right? You may not see it properly come back to that place. So this is the level of liquidity sweep down here. So we may not properly see it come down to mitigate the downside anymore, right? Because yeah, a whole lot of sweeps. Look at all these candle rejections and everything there, right? It tells us that okay, price has actually dealt in that zone and it has actually done a lot, right, in that zone. So we may not be looking at doing much there again. So in zones like that, you may want to look out for the flip entry, right? You want to look out for the flip entry patterns and spot them up, and you want to take your trade entry. So as I said at the beginning of the video, I will not be doing any discussions on the single candle order block entry. I will leave that for my own consumption. If you need any tutelage on that, you can actually come to our DM. We are pitch trading floor, and we'll be here again next week Wednesday. We want to see your questions, ask your questions. We are going to make videos to as a response to those questions. If you can request for videos, you can request for a series, we can let you have it. We are We are a trading floor. We are also a forex academy, and we are here to help those that are willing to be helped. And we have communities for traders that are willing to both learn and trade with other professional traders too. So we are happy to have you here. Please like our videos, subscribe, share these videos. I've seen some people physically tell me, oh, FX Josh, you are really doing well. Thank you. This or that. So different comments from different persons as a result of these videos, different testimonies of how these videos has changed people's perspective in the market, and they are actually more profitable now. So if you have such testimonies, you can always drop it on our comment box there, and we are going to reply. We are going to respond to them. Thank you for watching. See you next week, Wednesday.